Hey guys, what's up? Alec back with the daily stock market, and look at that. Our account is up $14,000 in the last 6 months, or 25%. This is only one of my accounts, by the way, and it's actually the safest of them all. However, in this video, we're going to talk about some of the most volatile stocks in the week, starting out with Salesforce down 19%, and we're going to talk about if it's a good buy after it dipped 19%. We also have UiPath, ticker symbol PATH, down 34% on the day, now at $12 per share. And in the last 3 months, they're down 49%. Now stay tuned, because we're also going to be talking about an AI stock that's up 19% after hours, gaining some traction after being down 22% or more. It was actually down a whopping 41%, 42% at one point in the last 3 months. April 16th, it was $20 per share. Now it's sitting at $27 per share. Slap a big thumbs up on this video, share this video with a friend, subscribe on YouTube for all the full-length videos, strap your seatbelt in, and let's get right into this video. So the first stock that we're going to be talking about, Salesforce, down 19%. However, if we go to the last 3 months, we can see they're down 39%. And also, by the way, March was their highest point, their all-time high, because if we pull out to a 5-year chart, we can see around March is when they made their all-time high of $315 per share, and it's just been down ever since March 1st, as we can tell from a 3-month graph, down 29%. Now, we also saw Salesforce peak in 2021 at $306 per share, and the last time they peaked and went down, they continued in a downward notion, 58%, down to $128 per share. So currently they're sitting at $217 per share. Are they worth it? Right now, they have a great business model. They're a SaaS company with a market cap of $211 billion. They're trading at a little bit of a premium with a PE ratio of 48, but they should be, because of not only their business model, but because they are a leader in the space as well. So we got some pretty big headlines on Salesforce. That's why I wanted to talk about them. Also, we can see Thursday was a big day for Salesforce, but not in a good way. The Salesforce stock price fell nearly 20% on Thursday, its largest single-day drop in share price since 2004. And by the way, they actually haven't even missed on revenue one time since 2006. They did miss today on revenue, but it was only by 0.5%. So it's outstanding that a company like this is showing so much resilience for the last 15, 16 years. We can see the reason why Salesforce first quarter earnings missed Wall Street's expectations for the first time in nearly 2 decades. Missed expectations for the first time in 2 decades, they missed their earnings. Wow, the resilience of this company is unmatched. With sluggish sales linked to weak demand in Europe, analysts at Bank of America and Morningstar substantially lowered their price targets for the stock, but maintain a fairly positive outlook for its long-term performance. And keep in mind, they only missed by 0.5%. So it was barely anything they even missed by. With profitability remains in a bright spot, we see a path for continued margin expansion, even as the firm invests in AI innovation, wrote Morningstar's Dan Romoff. Like many technology firms, Salesforce has been investing in new AI-based features in a bid to keep up with generative AI craze. In April, the company officially launched Einstein Copilot, its suite of AI tools for businesses that it's marketing as a safer, corporate-focused alternative to mainstream bots offered by ChatGPT and Google. However, I do like this company even at the current price of $218 per share. Obviously, I would like it closer to $150 per share would be the sweet spot. The last few quarters, we can see that their EPS has been growing. Their net margins have been growing quarter over quarter by insane amounts of percents. However, if we go to the annual, it doesn't look too promising. We can also see that the net income The recent year for 2024 so far has been a very great year. And if we look at the quarter over quarter, we can still see that net income growing and growing, which I really, really like to see. Total revenue has been pretty stagnant quarter over quarter. If we look at the year over year, we can see the growth happening consistently every single year for as far back as you can go. Let's check net income. Net income's been a little bit more consistent if you go a little bit further back, but the most recent quarters have been some of their best and most impressive. So it's looking like a pretty strong company here. We can see that the balance sheet is also very good with a debt to asset ratio of only 40%. So overall, I would give their income statement an A and their balance sheet a B plus. If we just take a quick look at what analysts have to say about CRM, right now we have on average a $300 price target in the next 12 months for CRM or Salesforce, with a high of $365, and the lowest analyst thinks $230 in the next 12 months. Right now it's under that, so there's very, very low risk in analyst eyes and very high returns. Okay, and a lot of these analysts just reiterated these price targets just yesterday, with a lot of 5-star analysts coming through, which is a very good thing to see. Another great sign. A lot of these are $300 price targets, $280. As we scroll down, we can see more 5-star analysts with $350, $335 price targets, $325. And again, these are all just reiterated yesterday from like JPM Morgan Stanley analysts. Most of them 5-star analysts as well. So overall, I think Salesforce CRM is a fair deal right now. It's not the best deal in the market, but if it drops under 200 and closer to 150, then I'll be taking another look at it and doing a little bit more of a deeper dive to see if I want to pour more money into something like CRM. But overall, dollar cost averaging in under $230 per share, I think is a good move for long-term investors. And remember, it's not financial advice. Next up, let's talk about PATH, ticker symbol PATH, down 34% just on the day. And if we go out to the last 3 months, we can see that they're down 49%. And since IPO, which was in 2021, we can see that they're down 81% with an all-time low around $10 per share. So they're knocking on all-time lows door. And the recent high was around $26 per share. So if anything, this could be a good swing trade, especially if you're able to buy under $10, $9 per share and trade it up to something like $20 per share for around 100% gain. I think that could be doing pretty well with UPath. They have a $6.9 billion market cap, so they're a significantly smaller company with a negative earnings PE ratio, meaning they are not a profitable company. We can also see that insiders were selling in Q1 2024 with 12 million shares sold. That was hedge funds. And if we go over to insiders, we can see most recently in May, we saw 96,000 shares of PATH being sold by insiders. Okay, so that's just something interesting to think about. They're getting closer to profitability, and the last 2 quarters actually have been profitable, and they reported 13 cents on their EPS, which is another good thing to see. Overall, we can see their net margins are pretty poor. Their return on assets is pretty poor. Their return on equity is pretty poor. Their EPS is pretty poor also, and their debt to asset ratio is pretty good. Now, if we scroll down, we can see their net income statement is very poor, and that's why the stock really hasn't been doing well since their IPOs, because right now the stock market cares a lot about net income, and if the last 5 years of your net income looks like this chart here, where it's all negative 500 million. Here, if we move the chart, we'll be able to see them all. 500 million, 2021. Negative 992 million, okay, getting closer to profitability, but then you have a 468% loss, and you report 500 million again in net losses on your net income. Okay, however, the bright side is they are trending toward profitability. Their most recent quarter has actually been profitable with a net income positive of 33 million, which is a 222% gain. So if they can keep up that net income growing consistently, that's going to be the number one thing for the stock. And as you can see, they have nothing to worry about on their revenue. I would actually give their revenue an A+. They're growing by high double digits to mid double digits every single year consistently on that total revenue. The net income, however, does get an F. If we scroll down to the balance sheet, I do like this company's balance sheet with only 31% debt to asset ratio. We can see assets around $3 billion and liabilities only around $1 billion. Okay, so they have significantly more assets than they have liabilities, which means they are comfortable probably with burning cash at least. Even though they're getting towards profitability, they were comfortable in the past 5 years with burning cash because their balance sheet has spoken so loudly. So overall, this stock gets a lot of mixed reviews. There's a lot of risks with it, but there's also a lot of upside. So I would definitely recommend diving a little bit deeper in this stock. It's an interesting stock. It's down 34% just on the day, so it could be a screaming deal, especially if you know how to value stocks. This is one that you should definitely have on your radar. And if you don't know how to value stocks just yet, message me, The Daily Stock Market, on Instagram. Now 232,000 followers, 930 posts. We've been doing this for over 5 years, posting on Instagram now, and over 1,500 positive testimonials. If you click on Success 2024, you can see some of our biggest winners on some of the most recent months as well. There's success stories every single day, but these are some of the ones I wanted to highlight and give you guys a little bit of a glimpse into some of the positive testimonials that's going on in our trading group. I have a few more spots going on right now and a few discounts that were extended from Memorial Day, so make sure you reach out to me on the Daily Stock Market on Instagram, and I'll shoot you over my website. You can see if it's inside your budget, and if it works for you, then let's go ahead and make some money together in the stock market. So Path is currently at $12. Here's what analysts have to say. They have a 62% upside on average at $19 per share, with some analysts have them as high as $30 per share, and the lowest analyst has them as $14 per share. Right now, they're at $12 per share. So in the next 12 months, in analysts' eyes at least, it's looking up. It's looking good for the stock. And a lot of these were just reiterated yesterday as well, which again is another great sign. They just reiterated this yesterday. They're saying hold, $15 per share incoming, $14 per share incoming, $19 per share incoming. JPM Morgan analyst Mark Murphy is saying buy because a $19 per share is incoming for this stock. Okay, so this is what analysts have to say. Overall, I see a lot of risks with this stock. Nothing's guaranteed. And personally, I'd be considering an entry on Path under $10 per share a lot more attractive. And unfortunately, we ran out of time in this video, but if you want to see me talk about AI stock, C3.ai, that's up 19% today. Make sure you drop a thumbs up on this video, and if we get over 500 likes on this video, then I'll actually be making the updated video on AI stock, talking about them just like I did the other two stocks in this video. And by the way, this stock, if you go to the 5-year chart, they're down 72%, just like Path is. You know, they IPO'd in 2020. They peaked at $162 per share, and then they fell as much as 93% with a low of $12 per share. So currently they're sitting at $27 per share. They bounced back a little bit, but the question is, can they get back to those IPO prices of $100 per share or even all-time highs of $160 per share? So drop a big thumbs up on this video, share this video with a friend, and subscribe on YouTube for all the full-length videos. Thank you guys for all the love and support and making it to the very end of the video. And remember, if you want to join the close friends list, just message me on Instagram, The Daily Stock Market. Check out Success 2024 highlight on the highlights section of my Instagram. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.